Welcome to Fibonacci clusters. In this segment, we'll talk to you and describe what exactly a Fibonacci cluster is, when we use them, and why do we use them, and we'll show you some demonstrations of how we actually apply Fibonacci retracement to the price action to come to a Fibonacci cluster. Basically, a Fibonacci cluster is an overlap of Fibonacci retracement levels at a technical point where we're looking to trade. It could be a pin bar reversal, it could be a doji bar, but essentially we draw the Fibonacci retracement tool from multiple points in order to look to see if we've got an overlap of different Fibonacci levels. We use them in any market which is demonstrating key swing highs and swing lows and has cyclicity, and we use them essentially to give us an extra reason to get into the trade when we're building the case for the trade. The more reasons we have in support of the trade, the better. And say, for example, we've got a very nice looking setup and it happens to be rejected the 0.618 Fibonacci level. It would be a lot better if it was rejecting another Fibonacci level as well, drawn from a different point. Confused? Don't worry if you are. We'll give you plenty of demonstration time, and we'll do this right now. So this is an example of pound Swiss. As you can see here, it's making key lower highs and lower lows. It's got good cyclicity, and this is what we want. We want the cyclicity in order to draw the Fibonacci retracements from key swing highs to swing lows. And we use it exactly the same way as we would the Fibonacci retracement, except that we take the Fibonacci retracement from multiple points. Like, for example, we could take it from this point to this point, or we could take it from the very start of the move to this point here. And if we give an overlap of Fibonacci numbers at this point here where we're looking to sell, then that's great, because it essentially gives us a better reason to sell this pin bar reversal here. So let's have a closer look at pound Swiss. So say, for example, if we're going to take the Fibonacci from the last swing high to the most recent swing low, we can see here that we've got a rejection of the 0.618 Fibonacci level here, which is fine. It's a tick in the box. So we always take the Fibonacci from the most recent swing high to the most recent swing low if we're in a downward trend, making lower highs and lower lows. Okay, so it's rejecting the 0.618. You might think to yourself, so what? That's what I'm thinking. It just happens to be one reason to go short. We want to build up a case of multiple reasons to go short. So let's see if we've got a cluster and an overlapping Fibonacci level if we take it from a different point. So let's do that. We'll get our Fibonacci tool, take it from this swing high to the most recent swing low, and we can see it's okay, it's tested the 0.618 just like this one has here, so whatever. But let's take it from this swing high here to this swing low. You can see it's respected the 0.50% level, which is fine. That's a tick of the box, so we've got that as well, in addition to our Fibonacci retracement here, the 0.618. But how about the start of the move here? Okay, let's have a look. Let's draw it from the start of the move all the way to the most recent swing low. And we can see that not only does it respect the 0.618 and the 50 Fib level, it's also respecting the 382 Fibonacci level as well, which is fantastic. This is known as a Fib cluster. We've got our reversal bar here. We've got our 0.618 Fibonacci retracement here. We've got it respecting the 50 Fibonacci retracement level, and if we take it from the very start of the move, we've also got it respecting the 0.382 Fibonacci level. So that is known as a Fibonacci cluster. We've got an overlap of 3 Fibonacci retracement levels here, which intersects with the price action reversal bar in this case. But that's Fibonacci. Let's see if we've got any other technical reasons to go short here. We can see here already that we've got a trend line. If we take it from this swing high, take it all the way down to the bottom, you can see that we've got how many tests? We've got 1, 2, 3, 4 tests against this trend line. We've got our Fibonacci cluster like we've discussed. Let's see if we've got a horizontal level as well. Certainly, the pin bar reversal is respecting a psychological number, 15100. Let's see, we've got 2 tests here. If we look on the hard time frame, we can see that, okay, it looks like it's forming a soft level, and it is a soft level. It's a level that's been respected ever since, well, respected and broken ever since 2010, and levels have memory. And if we've got a trend line correlated with a horizontal level and a Fibonacci cluster with a round number as well, we know full well that we've got a very decent case to go short. Even if we look at the hourly time frame too, at the point which intersects with this pin bar reversal, we can see that we've got a very messy looking head and shoulders reversal pattern. So we know full well that we've got time frame correlation here. But for the sake of this example, this is a classic Fibonacci cluster. To quantify a Fibonacci cluster, we need a minimum of 2 overlapping Fibonacci numbers. It doesn't have to be 3, by the way. 2 is absolutely fine to qualify it as a Fibonacci cluster. So it's one thing to identify a Fibonacci cluster, whether in an upward trend or downward trend, but it's always a good idea to see if we've got anything else in support of our trade. It's no good just simply saying, great, we found a Fibonacci cluster. This trade setup is so great on its own. It's just a confirmation we use. And it's nice when everything lines up. And as we're trying to identify structure within the markets, albeit with Fibonacci levels or horizontal levels or trend lines, it's just a nice confluence. Let's have another example. But before we do, I just want to show you what the chart finally looks like with all our Fibonacci levels drawn on, the horizontal levels of the trend lines. All the stars in the universe seem to be lining up here. We've got our pin bar reversal. We've got a reversal on the hourly as well. So, you know, great case for a short. Good reward to risk as well, if you're targeting the previous swing lows, about a 3-to-1. So we've looked at how we deal with Fibonacci clusters in a downward trend. But is it any different for an upward trend? Well, the good news is we do it exactly the same way, except the other way around. Instead of taking Fibonacci retracements from previous swing highs to swing lows, we take Fibonacci retracement from previous swing lows to swing highs. Let's demonstrate. So here we've got an upward trend on the FTSE 100. We can see that it's making key higher highs and higher lows here with peaks and troughs very nicely. And we've got our pin bar reversal, or bullish pin bar reversal here, should we say. But let's see, as we build up the case to go long here, given that we only want to trade with the trend, do we have a Fibonacci cluster aiding us here? Let's find out. Well, as you'll see, as we take the Fibonacci retracement tool from the most recent swing low to the most recent swing high, we can see that it's come to respect the 0.618 Fibonacci retracement, which is fine. No problem. But how about taking it from multiple swing lows to the most recent swing high? Let's have a look at the chart. So we've seen how it's already respected the 0.618 Fibonacci retracement, but let's see if we get a confluence if we take it from a different swing low to the most recent swing high here. Let's take it from this swing low, for example. And see, okay, awesome, it's respecting the 50% Fibonacci retracement level. That's fine, that's great. So we have a Fibonacci cluster based on the fact that we require a minimum of 2 Fibonacci levels overlapping. You can see here, we've got, okay, even though they don't need to overlap perfectly, if they overlap with the reversal bar, that's absolutely fine. Or the level, it doesn't have to be dead on, but we can see here that the reversal bar is not only testing the 0.618 Fibonacci retracement level, but also the 50% Fibonacci retracement level as well. Let's see if we can get a third overlap as well. So we can take the Fibonacci retracement from the start of the move right here, take it to the most recent swing high, and we can see that this bullish pin bar reversal is also respecting the 0.382 Fibonacci retracement, which is fine because we've got a Fibonacci cluster with 3 levels being tested by this bullish pin bar reversal. So we've got the 0.382 Fibonacci retracement from the very start of the trend here. We've got a 50% retracement from the second swing low to the most recent swing high. And we've also got from the previous swing low the 0.618 Fibonacci retracement. So we've got a Fib cluster here. Fibonacci cluster, great tick in the box if we look at Fibonacci on its own. However, we want a little bit more than that in order to basically qualify our trade. So let's have a look at the chart. We've got a trend line from the looks of it. Yes, third touch, that's one tick in the box. But one of the more important criteria here is it also respecting a horizontal level? It doesn't matter if it's a level which has been tested and broken in the past. It doesn't matter at all, providing that it's a bona fide level which might have been respected in the past. Let's see here. We take it up slightly. We can see that this test bar, low test bar, is on a level, albeit not as strong as the previous example we've seen, but it is on a level which has been respected in the past, like so, multiple times, even though it's been broken. So this attributes it to being a soft level. But what else do we have in favor of this? Let's look to the hourly, see what the shorter term buyers and sellers are saying as well. As we can see here on the hourly, we've got a higher low here. It seems like we've got the makings of a double bottom, which is fantastic. This is a great correlation to have with any kind of bullish pin bar reversal. If we've got a bullish reversal on the hourly, that is what we call time frame correlation. But for the sake of this example, we've got a Fibonacci cluster with 3 levels overlapping, as we can see here. But as we just mentioned before, we might have had our Fibonacci cluster. What else do we have in favor of the trade? Well, as we've identified, quite a bit actually. We've got a trend line, third bounce on the trend line. It's a bullish pin bar reversal. We've also got a high low off the hourly time frame. And we've got a horizontal level as well in support of the trade, or higher low. So that's how we use Fibonacci clusters in order to build the case for a trade long or trade short. Certainly, if you're drawing all these Fibonacci levels on the chart from multiple swing highs and swing lows, your chart could look very messy very quickly. That's absolutely fine, providing it builds up the case for your trade in a technical way, and you use it in addition to other technical indicators like horizontal levels, trend lines, big numbers, reversals on smaller time frames, weekly or monthly pivot bounces. Then that's exactly how we use Fibonacci clusters in the correct way.